Hello and welcome to this YouTube channel for ACCA FR exam prep. My name is Adam. In this video, I will be taking you through how to account for dividend paid. And dividend paid is accounted for under financing cash flows. So there is an extra from a full question which we will look at and look at how we can adjust for the dividend paid, particularly when it's not given in the full question to prepare cash flow. So let's look at the details. So we have a Kingdom. So Kingdom is a public listed manufacturing company. Its draft financial statement for the year ended 30th September 2013. We have 2012 as the comparative year. So we have the profit for the year. So take note. We have 2012, 2013. Then on the face of the financial position, I have equity information. So I'm extracting the relevant information. Under equity, my focus will be on the retained earnings. My focus will be on the retained earnings. Now, a simple calculation to look at a reconciliation of the retained earnings in order to ascertain the dividend paid. So let's see. So what I will have here, retained earnings. Retained earnings. So under it, I'll say balance brought forward. So I'll pick the prior year balance, which is 8,700. And this is happening within the statement of changes in equity as a reconciliation. So what I'll do is to add, so I'll say add profit or earnings for the year. So profit for the year. So I'll add it. And that information is the profit for the current year. And this is 1,800 with 1.8. So I'll add that. So I'll have here 1,800. Now when I add these together, so I have 8,700 plus 1,800. That gives me 10,500. So it means that the total profit available for distribution to the shareholders is 10.5 million. But what happens? So I'll leave a line and say balance carry forward. So this balance carry forward is the closing balance, which is the retained earnings for the current year, which is 7,700. So we put that here. Seven 700. So if we should have 10,500, but at the end of the period we had 7,700, then the balancing figure becomes the dividend paid in the year, which is the cash dividend paid. So 10,500 minus 7,700, and the dividend paid for the year will be 2,800, and that is an outflow here. So under the financing cash flow, you see the dividend paid as an outflow. Very simple adjustment. Alternatively, if you so chooses to do the T account, so if this is your retained earnings, remember retained earnings is income account, so it will have a credit balance. So you have balance brought forward, which is 8,700. Then we add the profit for the year. So profit, so P&L or profit for the year. So the profit for the year will be added as credit, and that would be 1,800. Now, we have a closing balance which would be income retained, and that closing balance carry forward was given to us as 7,700 at the end. So if we know this detail, then we can easily balance off these accounts and find the dividend paid. Again, you'd have this total as 10,500, 10,500, and the balancing figure would be again the dividend paid. So the dividend paid will be shown here, the same value, 2,800. So if it is a T account you are comfortable with, you can go that way. But often it's easier to analyze it in this pro forma sort of, where you look at the opening balance, you add the profit for the year to it. That gives you the total available profit for distribution. Then you compare to the closing balance. If it is not the same, the shortfall becomes the dividend paid in a year. And this would help you to account for the dividend paid under the financing cash flow. I hope this helps you in your preparation for the FR exam. Please subscribe to this channel to receive updates on new videos.